how it's supposed to. Okay, it's working. All right, so
go find where Phil. I will go find Phil. He is here. He's in the building, but I'll go find him. Oh, you'll go grab him? Okay, thank you.
Sally, are you in earshot?
Yes, I am. I have the camera focused on the members at the moment, but I'm sitting right next to Paul.
Okay, perfect.
Yes.
So are you open the meeting?
No, you open the meeting.
Okay.
And we'll do the minutes and then we go to the election.
Okay. Okay.
Yeah.
Right.
So Phil is getting off his phone.
Right.
Okay.
Hi, Sally. It's Kurt.
I didn't recognize you.
Put a mask?
How you doing, Kurt?
I'm good. You wanted me here, right?
Pardon?
You invited me. Right?
Yes, yes.
All right.
Okay, Phil is in the room.
Okay. So I understand Jeff's not coming. We have Phil, we have Janet, we have Paul, we have Bill. Is Andrew joining us? Do we know?
He was identified as not available at this time slot. So the best of our knowledge, he's not attending.
Okay. And do we know if Eli is joining us?
Eli did say he would be joining us.
Okay, so Eli indicated he would be attending. So perhaps he's just running a bit late.
Okay. So we have 1, 2, 3, 4, 5. So that's a quorum. So we could get started.
Yes.
I think that's a quorum. I'm trying to think of how many there were. I think there's 8 of us, 9 of us. All right. Well, if you say we've got a quorum, we've got a quorum. 1, 2, 3. Yes. No, that's good. We've got 5. I'm not counting myself. All right. Well, I will call our meeting to order then, and hopefully Eli will join us. Do you want to go ahead with roll call, Sally?
I think we were good with what
You're
you
okay?
just went through. Yep.
All right. Perfect. All right. So if there's any declaration of interest, I don't know that we've received any, but if there is something, do feel welcome to bring it up at this time or when it arrives on the agenda. So the first is our minute approval from February 8th.
We need to approve the agenda.
Oh, excuse me. Thank you.
No
I'm
worries.
not using all the screens I'm used to, so I don't have my, here, let me get the agenda up so I can see what's going on. There, I can read that better. Yes, so we have the adoption of the agenda and we have a recommended motion, be it resolved that the agenda for the April 11th, 2022 Finance Administration Advisory Committee meeting be adopted as presented. Is there a mover and seconder, please, for this motion? Moved by Bill King, seconded by Paul Kehoe. Any discussion to the adoption of the agenda? Seeing not, all in favor? Thank you, that carries. So now we go to the approval of the minutes. We do have a suggested motion for the minutes, but there is, I think, some discussion regarding the minutes. So perhaps we would go to that first. Paul, did you want to raise your...
Thank you, Madam.
Your concerns?
So in the interim, what has it, I'll turn this off now.
So Paul, we're not picking you up now.
Okay, now
there
you
are.
can.
There
okay.
you are. Now you're live on the radio.
So basically, in reviewing the minutes of the agenda, I noted that the mileage rate, I think there was a miscommunication or something. And the fact is that what I thought we had approved, and I was one of the ones that helped support the motion, was that we would apply the provincial policy rate to the board members, but it would not be applied to staff. And there's probably some good reasons for that, that the board members are part of the provincial thing, and that's what the new member for Ag on the committee would get, and that's appropriate. Whereas if you start looking at staff, it may mean that it would end up actually costing us more money in the long run, because people wouldn't be obliging to take their vehicle, which means that they would incur more overtime to come back to the authority, get a vehicle, drive it to the location, then turn around, drive it back again. And we have seen that when I was with the Ministry of Environment. So what I would like to do is amend that motion so that the staff mileage rate remains what it was before, but that motion is only applied to the board members. Okay, and that's what the crux of the business is.
Okay, thanks, Paul. So your amendment would be that the staff mileage rate remains status quo, and the change only affect the board rate of.
Correct.
Okay. Okay. So you'll move that amendment. Is there someone who would second that amendment? I think I see Phil, I think your hand's up. Yep. All right. So it's moved and seconded. Is there any discussion on this?
I just
Janet?
want to second that motion. Thank you.
Yeah, thanks, Phil. We've got that. Janet, you had a comment?
I guess I'm of two minds on this, because to find that there's the few cents per kilometer that would motivate staff to come all the way back and take their time to grab an MVCA vehicle, I just find that odd. I also think, just from the principle of it, that we are a provincial organization and that the same rate should apply to staff and to the board. So from that perspective, if staff are that motivated by the few cents per kilometer, you know, that goes to an overall compensation issue. And the fact that we are trying to address a compensation issue with a mileage rate does not seem to be the right way to do it. So those are just my thoughts on it. It's a complex issue, and I'm not entirely certain how I would vote on it unless there's any other comments. Thank you.
Okay, thanks, Janet. Were there any other comments on this amendment of clarity? Go ahead, Paul.
I think the other thing you need to look at, Janet, is that the guidance document that we were referring to for the province has a lot more into it than just the mileage rates. So that if we are going to adopt that document for staff, then we should also be looking at the other components of that document as well. And some of them speak to a bunch of other things that don't currently happen in the Conservation Authority. So though I approve the idea that the board, I personally feel the board needs to get under control with mileage rates and per diems and the whole thing, because of what goes on with the other boards that I'm involved in. But I don't think that the intent of the board was to say that there was anything out of control with the staff. So I would like to see the staff remain with the mileage rates that are currently being done by most of the conservation authorities in the area, or consistency there. Thank you.
Okay, thanks, Paul. Any other comment on this before I call the vote on this amendment to the minutes?
Could I just ask a question of clarification, please?
Please do.
So when we're writing, like, I'll have to come up with final wording after this, but is the intent that the staff mileage rate be at the 2001 rate, or that the original recommended rate as put forward back in early February, where it be inflated for 2022? So I just need to know, are we staying with the 21 rate, or are we inflating it to be a 22 rate?
Paul, what was your intention?
I guess it's since my motion, I would be going with the 2022 rate.
So an inflated rate? Okay, thank you very much.
Okay. And actually, maybe just a motion of clarity here, or a question of clarity here, excuse me. So Sally, I wonder if I have gotten this out of order, if we should have the resolution to accept the minutes there with this amendment. Do we want to do this amendment first? Like, how is it best detailed for your purposes?
So I guess a question to my mind was it generally the understanding of the committee that they were amending mileage rates for all, in which case this going ahead of the minutes makes sense, or pardon me, wouldn't make sense. So if everybody was of the understanding that you were changing all mileage rates for both staff and board, then yes, you would need to approve the minutes first, because that was the intent of the committee. But if there was a more broad misunderstanding about what was actually being approved, then I think it prudent that we amend the minutes to reflect what board members or committee members actually thought they were approving.
Okay.
And then approve the minutes as amended. So I don't know what the general understanding was, if there's consensus on that.
Well, Paul did say his understanding was that this applied just to the board. I was actually of the opposite mind, but that could have been my misunderstanding. Phil, I see your hand is up.
Yes, I understood that we were just applying this to the board members to use the Ontario rate.
Okay.
And I think Paul has mentioned, it's important to try to encourage staff, I believe, to take their own vehicles, and even at the higher rate, because they can come from their home. They don't have to go back, and it may be a shorter trip. And I also find that if there are less company vehicles, people look after their own vehicles better than they look after the collective vehicles that are owned by the company. So I think it would be a sensible idea to do what we can to encourage staff and not feel that our attempts at frugality was going to demean their income. So encourage staff to use their own vehicles where that's possible, I guess is what and I thought it was clarified at the meeting that it was just applying to board members. Okay. But anyway, thank you.
Okay, thanks. Thanks, Bill. Go ahead, Janet.
Just to say, Krista, I was with you. I believe we were voting for both staff and board rates.
Okay. So we're 2-2 here. Bill, what was it that you walked away with? Because I just want to make sure that we're doing this accurately. And if it means we do the minutes first and then make a change second, it's not a problem. I just want to make sure that we are following a appropriate process. Did you leave the meeting understanding that this was applying simply to the board, or was your thought different from that?
I left the meeting thinking it applied strictly to the board.
Okay.
However, I favor applying it to everybody.
Okay. Okay. So in that case, I think we are following an appropriate process to change the minutes ahead of adopting them. So just for clarity, then our motion is to amend the minutes so that the staff rate remains status quo. And those 2022 rates, as have been proposed by the staff, would be applied for staff only, and that provincial rate would be utilized for the board only. So I think that's a little bit convoluted, but I think that's what we were intending to get to. Did I get it more or less right for you, Paul?
Yes.
Okay. Okay. So we've had some discussion. If there's no further comments, I'm going to ask all in favor of this motion to raise your hands. So we have 1, 2, 3, 4, 5. Okay, so we are unanimous on that. Thanks for the clarity on that one too, Sally. So then when we go to our motion to adopt the minutes, perhaps I would adjust this slightly then. Resolve that the minutes of the Finance and Administration Advisory Committee meeting held February 8th, 2022 be received as amended. Would that be more appropriate, Sally?
Yep, and
okay.
Approved. And approved.
Thank you. Yeah, amended and approved. Thank you.
Yeah.
Is there a mover and seconder then, please, for the minutes? Moved by Phil Sweetnam and seconded by Paul Kehoe. Is there any further discussion on the minutes or other items to address? Okay, seeing not, all in favor then of approving the minutes. Thank you, that carries. Thanks very much, everybody. Now I think it's at this point I pass things over to you, Sally.
Okay, thank you very much. Just so you know, in order to share the screen, you guys are going to disappear pretty much for us. So, and actually, Ross, if you wouldn't mind just moving the camera so that it's focused on me and Ange. If you look over your shoulder there. Perfect. And then perhaps you and Ange could change places just for this item, this first item. Oh, yeah, we do the election of officers. Sorry, I was thinking right into the agenda. Okay, so my apologies. So first off, I need a resolution appointing me as chair for the purpose of the election. Can I have a mover, please? Krista? Actually, I think Krista, you're supposed to do this.
Oh,
so yeah, sorry, you carry.
Okay.
It. So yes, if you could.
So I'm looking then for a mover to have Sally be the election officer for this. So moved by Bill King, seconded by, I can't see anybody else. So Janet, thank you. All in favor? There we go. And I'm hoping Paul and Phil, you put your hands up. I can't see you, but I'm sure you did.
Yes.
Great.
Yes, they did.
So that carries. So back over to you then, Sally.
Okay. Yes. Thank you. Sorry about that. Okay.
No,
so I officially declare the positions of chair and vice chair of this committee as vacant. At this time, I'd like to know if there are any nominations for the position of chair. I have Paul raising his hand.
I nominate Krista Lowry.
Are there any further nominations for the position of chair? Are there any other nominations for the position of chair? And one last time, are there any further nominations for the position of chair? Okay, thank you. Krista, do you agree to stand for the position of chair of this committee?
I do.
Thank you very much. Well, then I would like a motion to close the nominations, please. Can I have a mover? Phil Sweetnam, and a seconder? Janet Mason. Okay, all those in favor to close the nominations? Very good, we have that carried. So given that there are no further nominations, I would like to say that with the nominations closed, Krista Lowry is duly elected by acclamation. So thank you very much, Krista. I turn it back to you.
Okay. So correct me, I don't have the election motions in front of me. So do correct me if I misstep here, but we'll be looking then for nominations for the position of vice chair. Are there any nominations for vice chair? Janet.
Yes, I would like to nominate Phil Sweetnam.
Okay, thank you. Are there any other nominations for vice chair? And actually, I can't see Paul or Phil. So Sally, if you can just let me know.
I will be your eyes and ears here.
Thank you.
Yeah.
Are there any other nominations for vice chair? Are there any other nominations for vice chair? All right. So Phil, do you agree to stand for the position of vice chair?
It would be my pleasure to do so.
Okay, thank you very much, Phil. So seeing that there's no other nominations and that Phil is willing to sit or to stand for the position, I'm looking then for a motion to close nominations, please. A mover and seconder. Moved by Bill King, seconded by Janet Mason. All in favor of closing the nominations for vice chair? I'm going to assume Paul and Phil, you've put your hands up. Okay, thank you. So the nominations are then closed, and thank you very much to Phil Sweetnam for continuing as vice chair. All right, so our next item is report 3212, 22. This is on page 6, and it's the Bucci offer to purchase part of the KMP. So Sally, I'll pass it back over to you.
Okay, thank you very much. Ange, do you mind just adjusting that a little up a bit? There we go.
And actually, Sally, maybe before we go too far, just so that we're all on the same page, you have the report that you're going to present, and we have Mr. Bucci on the call. Then he'll have, I think it's 5 minutes to speak to the report, and then we'll go into closed session for consideration.
Yes, we also have Kurt Greaves from the County of Lanark and Richard Allen from the County of Frontenac, who may also want to speak to this item before moving in camera.
Okay, thank you.
Okie doke. So now I will share my screen. And is the agenda package? Okay, so let me just maybe go here, there. Come on, there we go. And okay, very good. So, thank you very much, Madam Chair. So today, the first item on the agenda is a review of a proposal by the Bucci family to purchase a segment of our KNP trail. The report circulated to you, which I have here attached, illustrates where this is. So this property is in North Frontenac in the County of Frontenac. It's at the end of rural road, Wilbur Road, in a historic community called Wilbur. It's roughly a 650 meter length of the KNP, and the offer pertains to the full width of the trail, which is roughly 22 meters. Sorry, I just need to continue to scroll down here. So there is a lot of history between ourselves and the Bucci as it pertains to this site. However, where things stand right now is that we have a plan, which I'll pull up in front of you. Sorry, I think I just accidentally scrolled over it. Oh, pardon me. Sorry, this is, oh, here we are. Okay. I'm curious, do you guys, from where you're sitting, are you seeing my screen where you can actually see people? Or are you seeing the full drawing? I just want to know whether you have an encumbered view of this drawing.
So we can see the drawing. I think if we're seeing the other members on the call, it's not from your screen, it's from our own screens. Okay, and that can be shifted back and forth, but your screen, it's just like just the lot mat right now.
Okay, excellent. Okay. So, sorry, I'm having mouse issues here. Let me just try to get that out of my way. Okay. So the offer to purchase is, as I said, the full width. It comprises part one. And can you follow my mouse all right? You can sort of see where I'm showing to the left side. That whole part one takes us over to where Wilbur Road ends. This is the end of Wilbur Road right here. This is the part over which the Bucci family has used access for a long, long time. This sort of triangular type parcel here is where there was a fence and gate installed back in 2014. The traveled portion of the KNP is basically the middle of here. There's scrub and brush on either side, but it opens up at various locations as well. And then, so part 2 is this part that goes across the KNP, and then part 3 is this northern section of the KNP, because their driveway tends to curve to the left there and then go to their property, which is up here. Then part 4 is the remainder of, oops, again, mouse issues, my apologies. Part 4 takes you then the balance to the end of the lot line, the boundary. So to the best of my knowledge, the Bucci's own most of this lot to the east. This is actually, east is the top of the page of the KNP. So their offer to purchase is for all of 1, parts 2 and 3, and all of 4. Now, the courts clearly say we do own all of that. And when we have evaluated this, there are several reasons why we do not think that we should be selling any or all of this, this land to the Bucci family. So I'm going to continue to scroll down. So as the board is aware, we have been in discussions with the County of Frontenac, Lanark, and Renfrew about transfer of this property to them to secure a recreational trail loop in Eastern Ontario that can be used for locals as well as for, you know, promoting tourism in Eastern Ontario. There is a history, particularly right now in the County of Frontenac, of challenges dealing with privately owned segments of the KNP Trail. And the County of Frontenac has methodically been trying to deal with those. It does not make sense to us to create another potential challenge for them by selling this before we sell the entirety of the KNP to the County of Frontenac. This is creating an unnecessary encumbrance that they would potentially have to deal with in future years. As for, you know, selling a portion of it and allowing portions of it to be fenced or gated, we are familiar ourselves from operations that we have on the KNP, and the County of Frontenac has reiterated this, that when you're doing capital projects or maintenance and works within a fairly confined space to begin with, any kind of encumbrances like fencing and gating become a challenge for performing our work efficiently and properly. As well, they can become hazards to people using the trail, and they can also set up expectations and behaviors by others that we are not encouraging on the KNP. Continuing on, this parcel was, when it was originally acquired by MVCA in 1990, was paid in half by the province. And policies governing the disposition of Conservation Authority land requires that the minister be informed and approval sought. In fact, that the disposition, some of those funds to the proportion that the province supported the acquisition in the first instance be shared with the province. So the policies that we would be asked to comment on in our application to the minister are there before you. The first one being that it fulfill the objects of the authority. And whether you look at the old act or the new act as amended, there's nothing about the sale of this property that fulfills the objects of the authority. You know, our objective is to allow for and facilitate the conservation of land for public use, and by creating this segment of the KNP that is in private ownership would be, you know, counter to that. There's also implications for the impact on forested lands and other conservation lands. We would have to go out to the public on this, and given the challenges that were faced this past winter on the KNP with access well, the lack of access due to other privately owned areas south of this section of the KMP, I think it would be very difficult for us to justify to the province why we felt that this was a good thing to do. Though we haven't had feedback specifically from Township of North Frontenac, it needs to be borne in mind that we would need to seek a consent from them to sever this parcel for the purpose of selling it to the Buccis. They actually make use of these parts 2 and 3 that you would have seen, particularly part 2, for their maintenance on the Wilbur Road, because they need a turning circle to deal with access, you know, when they're trying to clear the road or do grading or other activities on Wilbur Road. So there's no guarantee that they would provide a consent, and there's no mention in the purchase to offer of offsetting any costs incurred for any of those activities, be it the severance application, engaging with the province, and fulfilling any conditions associated with severance. So at the end of the day, we do not recommend this, and I am happy to answer questions now and then to turn it over to Mr. Bucci to present on this item.
I'm just going to adjust so I can see everybody. Oh, I think I see Eli joining us.
My apology, late, but
Hey, better late than never, right? So that's just fine.
sorry about that.
No, that's okay. So I just wanted to see if there was any questions for the staff before we hear from Mr. Bucci or the County of Frontenac or the County of Lanark. Again, Sally, kind of leaning on you for Paul and Phil, if there's any questions they may have.
Phil has a question.
Okay, if you want to go ahead, Phil.
Yes, I didn't see where your cursor was moving. Is it the top or the bottom part of the map that the Buccis own?
Top.
Top, thank you.
Were there any other questions to the staff? Okay. And actually, maybe before we go to you, Mr. Bucci, I'll just check in with the county. So Kurt, I don't know if you had any questions or anything you wanted to share at this point.
Thank you, Chair. I just wanted to tell the committee that we're actively working with our legal and a surveyor to figure out what we need in order to acquire the lands with clear title. So that's working with Renfrew and Frontenac to acquire the entire parcel owned by MBCA. And that's where we're at. It's an active file. It's on my desk, and we're having meetings periodically. And we'll be taking this back to County Council once we know what's involved in getting clear title. Things have changed a bit with the Land Registry Office since 1991, and we need to do our due diligence, and that's where we're at. Thank you for the opportunity.
Okay, thank you. And Mr. Allen, Richard Allen from Frontenac, I don't know if there was anything you might want to comment on at this point.
Just to echo what CAO Greaves has said, we're working with the Conservation Authority and through Kurt's office, thank you, Kurt, to get the clear title for the entire parcel. I think all 3 of our counties that are interested in the KMP Trail are seek to preserve this recreational asset and connect it to the other recreational assets through our region. And that includes the lands in question here. Okay.
All right, thank you. And I think at that, unless there are other questions that have come up for members of the committee.
Phil, did you have a question? No, I was just trying to. Oh, okay. He was stretching. My apologies.
No problem. So, Mr. Bucci, we'll pass it over to you. So, so you have 5 minutes to make whatever presentation you may like to the committee, and I welcome you to our meeting in this kind of strange virtual format, but I'll pass it over to you.
Thank you very much. Can you hear me?
Yes, we can.
Okay, great.
Yeah, you're very clear.
Pardon?
You're very clear.
Okay, great. The letter that we submitted March 27th, 2022 clearly and honestly states our proposal, and we stand by its content, so we will not take up your time by reviewing it now. However, we hope that you will give it equal consideration when addressing the board of directors with your recommendations. We would like to instead to discuss the staff report just presented. We are very disappointed at the overall negative tone of the staff report, which appears to have been written to paint the worst possible scenario while totally ignoring any of the positive benefits, financial and otherwise, that Mississippi Valley would derive from accepting our offer. There is no advice on the financial consequences of refusing our offer, only a concerted effort to convince you to reject it on the unjustified premise that accepting it would somehow end recreational activity in the entire eastern half of Ontario for forever. This is completely absurd. We have stressed on numerous occasions, including testimony in court and our current letter, that it is not our intention to block the KNP trail. Our family has never blocked the trail in the 60 years since the railway has abandoned it. As Mississippi Valley and many trail users are aware, the trail has always been open for year-round public use, and we have maintained it at our own expense by removing hazardous boulders, deadfall, and beaver dams. We don't appreciate that the report author has presented a falsehood that our aim is to close the trail as a definitive proven fact. Encouraging acceptance of that idea borders on slander and defamation of our character, and will only result in whipping up resentment towards us. It will cause the very misinformed people you are afraid will raise objections to do just that, to advance their own agendas and turn this matter into a complete circus. We have seen this happen before. Malicious rumors and misinformation play no small part in the reason why we are all here today. Given that the only purchase offer by a private landowner being discussed today is ours, the idea that our ownership would automatically create problems that you envisage is implied and completely unappreciated. Most of the staff report is based on pure, unproven assumptions and innuendo. Most of the glaring assumptions is that that if you sold us the land, we would automatically close the trail, bringing a crashing end to all access, recreational use, and township maintenance. Nothing could be farther from the truth. Please stop advancing the unfounded, inflammatory opinion immediately. From background, a few problems we would like to clarify. When we rebuilt our fence and gate in 2014, we situated it well within our property, not on Mississippi Valley's property. The minutes of the settlement required Mississippi, the judges' requirements require Mississippi Valley to provide us an agreed easement that is not just the one that they deem appropriate. To date, we have only ever received one official written easement from Mississippi Valley dated August 24, 2021. Yep, and it was totally unacceptable. Our legal counsel has advised that in items agreed to in the minutes of settlement must occur simultaneously. No, we have we have not contested the reasons of judgment. Any opportunity to do so expired 1 month after the judge's ruling on September the 12th, 2017. Until such time as Mississippi Valley provides an easement, completes the steps required to absorb our property according to the Land Registry Office.
So Mr. Bucci,
yes?
We're actually beyond the 5-minute mark at this point. So if you can wrap up the points you'd like for us to hear.
Well, yeah, that's what I'm doing. I have a few more pages to go.
Yeah, but, excuse me, it's Martha. We don't have much more, but a lot of the items that have been discussed that Sally went over very quickly. When your members read the report in total, many of those items we would like to state our opinion, and I'm sorry that it may be a little bit longer than required, but this is our only opportunity to put forward our opinions. And, you know, we would like to ask your indulgence because, you know, we're not used to doing this. So,
no, I appreciate that. We do have a lot of other items on our agenda. So yes, well, I'm happy to give you another minute or two, but I do need you to wrap things up.
We'll be as efficient as possible. Thank you.
We are not responsible to complete the judge's instructions. She directed that Mississippi Valley assume that responsibility at their expense. We have approached Mississippi Valley on many occasions over the last 5 years to encourage disclosure. For a significant period of time, our legal counsel contacted Mississippi Valley on a monthly basis, but was completely ignored, so he finally stopped, finding it futile. Our unsolicited purchase offer is the latest example of how we are encouraging completion of this matter. As suggested, please refer to our letter in assessed value. In the minutes of your previous board of directors meetings, you have reported an appraised value for the entire 35 kilometers of the KMP Trail, but indicate that the counties will only be paying a nominal amount to purchase it. Your report assumes that selling us one small portion would pose significant interruption in the trail ownership and control, and could undermine the overall value of the sale to the 3 counties and the value of the land within Frontenac County in particular. Have the counties made any actual financial offer? How much of a reduction are you assuming might occur for the removal of less than 1/2 a kilometer, 1.4% from your 35 kilometers? We're offering top dollar, twice the assessed value, which should be more than compensated for any reduction that you might think might occur. County of Frontenac. Frontenac County is determined to complete the trail to the border with Lanark County in a timely manner. It is clearly demonstrated that there is nothing that will prevent them from pushing forward, so your anticipated concerns are unfounded. You report that Frontenac County doesn't want the trail severed or to deal with more private landowners. As you know, you can't dispose of our property until our legal issues are resolved. So the trail is already severed. Leaving our issue unresolved will only result in the very unnecessary delay the county hopes to avoid. And why is the report author jumping to the conclusion that there will be a problem that would need to be dealt with by North Frontenac? The county's landowners' issues are outside Mississippi Valley's area of concern, but you should be aware that of the 12 landowners the county is reportedly in discussion with, agreements have been reached with all but 3. We have never blocked the trail. Some of the land.
So, Mr. Bucci, I'm going to have to ask you to end now. We're well over the 10-minute mark. So that's double the time that had been indicated to you. And so we're going to have to move on at this point. Are there any members of the committee who have a question for Mr. Bucci? And if not, we'll move into closed session for consideration of the offer to purchase. Yes, Janet.
I have one question for Mr. Bucci. Why do you wish to purchase this section of the trail?
We want to purchase the section of the trail to end this legal nightmare that we've been in for 10 years with Mississippi Valley. They can't seem to finalize it. So we discussed with our lawyer about purchasing it to present a means to finalize the legal issue. Otherwise, we're going to be back in court, most definitely, over survey, ownership, etc.
All right, thank you. That's all I need to know. Thank you.
Yep.
Thanks, Janet. And Phil Sweetnam, did I see your hand?
Yes, I believe the authority accepts that you have the right, because you've been there a long time, you've got a sort of prescriptive right to get there. What else do you need? Other than you have a right to get to your property over the what you've used for years. That's the
so Phil, I think I think that Janet's question sort of answered the question that you've asked. We don't want to get into a back and forth with Mr. Bucci.
Excuse me, if I could just make one comment on that, please.
Sure.
The judge actually ruled that Mississippi Valley was required to give us a legal easement to access our property. Of course, we do have a prescriptive right to cross the property, but it was her direction that they should provide us one. And they agreed in the minutes of settlement that they would provide us an agreed to easement, which means they can't just enforce an easement on it. We have to actually agree to that easement. It has to be appropriate. To date, we have received one easement offer, which was totally unacceptable, unfortunately. We would have loved to have accepted that and have this issue finished, because that is the reason we're approaching you with this purchase offer. Thank you.
Thank you for that. Paul Kehoe.
Just a follow-up to that, you've stated at least twice or 3 times that it was totally inappropriate. What, in a very condensed version, why wasn't it appropriate?
Well, we don't want to get into those details. However, there was an excessive amount of insurance required. There was incredible restrictions put on our driveway, which we have owned for 130 years. It was just not something that we were willing to put future generations of our family, put that restriction on them. We've only ever had one offer. We were hoping that if we went back to Mississippi Valley, that they would approach us with at least some negotiated conversations. But in 10 years, we've been associated with them. Unfortunately, discussions have been very limited.
Okay, thank you for that response. If there are no other questions of clarity from the committee, okay, I'm seeing none. We have a recommended motion that the finance.
Before you do your recommended motion,
Mr. Bucci, we've given you quite a lot of time.
I would just like the board, financial board, to note that you have cut us off in terms of responding to your 5-minute rule. In fact, we have exceeded over 5 minutes in further questions, which would have been answered had we been allowed to continue. I think this is totally unfair.
Excuse me, I have just one final request.
So we're moving into closed session at this point. We've been very generous with our time. We do have your letter as well.
I would ask.
So at this point, please don't speak over me. At this point, I'm looking for mover and seconder to move into closed session. It's moved by Paul Kehoe and it's seconded by Phil Sweetnam that the Finance and Administration Advisory Committee move to in-camera discussion to address a proposed or pending acquisition or disposition of land by the authority, and further resolved that the MVCA staff remain in the room. So that's moved and seconded. I'd ask all in favor, please raise your hands.
I would ask to be.
Thank you. Mr. Bucci, thank you very much. No. If we can please move into closed session.
Can we just record that I was voting against closed session?
Yes.
I'll note that, Bill.
So Sally, who all do we have on our call right now? I think Mr. Allen would need to. I'm not sure who analyst is.
Analyst is our co-op student who helped prepare items for you on either items on this agenda. So
okay, so that's one of us. Okay.
Yeah, but
So are we okay to go ahead, Sally? Or do you have people to let back in or?
Okay, there's nobody waiting to come back in. So it's now recording and we are in open.
Okay. So we were in closed session considering a purchase of or an offer to purchase land. The motion coming out of our in-camera discussion is be it resolved that the Finance and Administration Committee recommend that the board decline the Bucci offer. Is there a mover and seconder for the motion? Moved by Paul Kehoe, seconded by Phil Sweetnam. All in favor? And all opposed? See if we can note that Bill King is opposed. Thanks very much, everybody. So going back to the main agenda here. So our next item is the management of reserves. This is the report on page 16. So I'll go back to you, Sally. So Sally, we're not picking up anything. I don't know if you're speaking yet or not, but.
Sorry, there we go.
There you go. Thank you.
Okay. Okie dokie. Okie doke. So as you know, we had a fair amount of discussion about reserves in the late fall and earlier this year in association with the budget. And so the co-op student who is no longer on the line here, but I had him do a fair amount of research for us and to come back to us with what he found, not only looking at what other CAs are doing, but also what other municipalities are doing. And so what he generally found is what you see in these bullets here, which is that some, but not all, have posted policies, because unfortunately he wasn't able to, actually interview a lot of people on this. But in terms of what we found in terms of posted policies, even the largest organizations that we looked at didn't necessarily cover all of these. And that by and large, the points covered were of an advisory nature only, that they were sort of targets to be aimed towards, but they were not fixed that the organization had to maintain a certain reserve balance in relationship to any one parameter. But these are all items that we could contemplate going forward and see if we want to have policy around. So it's not that they don't have policy, it's more the scope of the policy and the nature of it, that it's not prescriptive, that it's more of a guidance nature. So then when we look at our current state, there isn't the same direction given to CAs as there is done to municipalities under the Municipal Act. And the policies we have in place right now are actually quite limited. You know, it speaks to a restricted reserve or reserve fund having shall be for purposes that, let me just get the proper wording here, sorry. Minimum amount for a restricted reserve shall be 25,000. Another policy was adopted in the past, in 2015, related to replenishing a fund for the Milliken Tail Museum Building and Art Collection, and that was realized. But other than that, I mean, we did a fairly thorough search and could not find anything beyond that governing the management of reserves here at the Mississippi Valley. So these are the reserves we have in place today. We have one operating reserve, general/operating reserve, and then the other restricted reserves or reserve funds. So, you know, overall, the sum total of them at a glance are fairly healthy reserves, but then we all know that those monies are spoken for in some shape or form, either in the short, medium, or longer term. So when we look at historical practices, just of how we've actively managed our reserves, the treasurer has been responsible, has been operating under delegated authority to, you know, invest those monies as appropriate. In the past few years, we've had several that have come due, and you can see they were for varying amounts, varying periods, varying rates. And with the goal being to keep invested as much as possible while ensuring that we have adequate cash flow to meet our operating and capital needs. Now, unfortunately, as rates have been very, very low in recent years, you know, the use of GICs recently dropped off because there was no actual benefit over maintaining the money in our high interest savings account. Now that situation is changing, and Ange has been meeting with Scotiabank, and we're exploring what options there are for managing those monies going forward. So, I mean, the crux of part of the discussion that we had earlier this year was in terms of what's an appropriate balance of the operating reserve, and how do we want to manage the establishment and use of the restricted reserves, but also the use of the operating reserve. Now, this one works left to right to left in terms of the historical dates on the right there, 2011. So you can see that the operating reserve, which is in the orange, has increased over time. We have had a couple of years of surpluses. And you can also see how our operating expenses have increased over time. And then the green is the operating expense net of levy. So when you take away the levy funded component of our operating expense, what you're left with is what's in the green. And so the conversations that we had last fall and again this year with Glenn Street from our auditor, as he was making mention of, you know, you want to track that ratio. You want to have a decent ratio between your operating expense net of levy and your operating reserve. Now, he had suggested a combination of either a fixed amount in the order of 600,000 or something between 500 and 600,000, or between 100 and 120% of our operating expenses. So we looked at that, and that's a very aggressive amount to put in. And he acknowledged that that's largely based upon his experience with nonprofit organizations in the not-for-profit sector, that amount may or may not be appropriate for a quasi-governmental organization such as ourselves. So this is where then we did some additional research around how do organizations set operating reserve targets. And so we started by looking at our non-levy sources of revenues. And this table here illustrates to you that, yes, we occasionally get significant grants, and the ones that are largest are largely associated with the WECI allocations, because WECI is included in this analysis, so which is a capital fund, as well as some of the programs that we've participated in with the City of Ottawa, where we've done specific contracts with them, like the carp erosion control, another capital project. So the dark brown can be a bit deceiving because it's often been associated with major capital or the NDMP, the National Disaster Mitigating Fund, funding that's been used to do some floodplain mapping over the years. So they tend to be very project specific. So in other words, they will vary always year over year, depending on what initiatives are in play. The 2016, that big blue, is when we sold the Glencairn property. So that was, you know, again, that's a one-off. So when you look across all those years, you can see that generally speaking, where we're landing is somewhere around between 600 and 800,000 per year in non-levy source revenues. Now, when you just look at that, then you can see the bright yellow, where in 2019 it was halved. That's when our provincial funding was halved from the province. So now when we're just looking at 2019, 20, and 21, the bulk of our revenues come from the planning and permitting side of things. So, you know, it's sort of a shrinking envelope, I'll say, where when you really pull out these extraneous things, be it these major funding envelopes that come for special projects or a land sale, and now you remove, what is an annualized amount of the Section 39 transfer we received from the province. The vulnerable part of our non-levy source revenues is largely planning and permits. And as we know, that has been a growth area for us for several years now. Absolutely, a housing crash is a possibility. Development industry could see a downturn in future. If that were to be the case, you may recall, though, that in the workforce plan that the board approved in October, I had identified positions within the organization that were volume-based. In other words, we need those positions because we're dealing with an inordinate volume of applications, and that they would be fee-based positions. In other words, they need to be funded through fees going forward for us to sustain them. So if we were to see a protracted downturn in the economy and a drying up of our planning and permit revenues, there would need to necessarily, both for workload reasons and operating expense reasons, to be a reduction in staffing accordingly. So we do not see that as being either a high risk in the short term or over a protracted period, a challenge in the longer term, because we have the tools within our toolkit to mitigate that impact on the operating reserve. So where does that leave us? So I'm just going to continue down here. So when we were looking at what other risks are there, so there's the risk we don't get the revenues, but what about the risks on greater financial pressures? And this graphic here, sorry if I can enlarge it a bit there, can I? Where's the plus sign? Oh, I guess maybe I can't, but in any event, these variables are what we looked at next. Now, a lot of those variables we already actively manage through our insurance. So again, this table, hopefully you can see the one in front of you more clearly in the paper copy, but we have a fairly comprehensive insurance policy to mitigate any number of risks. And we do pay, you know, an annual premium in accordance with that. And that is absolutely a fixed cost we have to continue no matter what. But when we looked across the board there, the likelihood of a significant, you know, multitude of those occurring in 1 year is unlikely. And when we look at historical rates, the most we've ever had to pay in terms of a deductible, and you correct me if I'm wrong, was $5,000. And do you recall over what period that was? Like since you've been here, like in the past 3 years? Okay, so in the past 3 years since Ange and I have been here, we've only had one claim. Now that's not to say you could have years where you'd have higher claims, but we felt for, you know, the sake of argument, okay, assume, you know, if the totality of these was, what did we come up with? 68,000 in terms of maybe, oh, pardon me, 49,000. But if we took 25% of that, let's just say across the board, 25% of our deductibles we had to pay out in any given year, that money should absolutely be in an operating reserve ready on hand so that if we had deductibles we had to pay out, they'd be available. The next variables we looked at were, okay, what about non-insurable additional expenses? So like a protracted vacancy where we can't fill a position for whatever reason, and we have to contract out that service. So we looked at, okay, assuming, and these are fairly typical kind of numbers because we have experienced this, where you have somebody in a position for half a year, but then it's vacant for half a year. But you have to contract that out. Well, typically consultant rates are at least double an average person's rate. So what that equates to is another $4,500 that we'd want to have on hand in the case that a critical position needed to be filled by a consultant. So that's another unplanned expense that we should have cash on hand for. Related to that is the next one, which is that sometimes you have staff leaving and there's overlap with new staff, or you have severances that you have to pay out. There's unplanned compensation monies, and that you should have on hand in case you have to pay it out, because these typically are short-term cash expenditures that you need to have cash on hand to handle. So in this instance, we're assuming a payroll overlap of 3 months. 3 months is not unusual if you have several positions over the year, or in terms of a severance pay, et cetera. And so we felt, you know, that 17,170 would be an appropriate amount to always have on hand to ensure you could cover those kind of unplanned expenses. And then lastly are the emergencies, inflation and litigation. That, you know, any organization should have on hand. And so we just provided an example there of 9,300, but you'll see in the figure on the next page that we're suggesting a much greater amount than that. So lastly, this one is a sort of planned, unplanned impact on the operating reserve, which is grants. So depending on the nature of grants, they often require you to expend money to get money. You have to cough up your percentage of the value of the project or the wage of the employee. And definitely during COVID, we saw changes in some of the design of the grants, particularly for our summer students, where now they only cover 8 weeks as opposed to 16 weeks. So we just wanted to flag that, you know, often it's these grants that allow us to make progress on some of the strategic initiatives that we're not able to make progress on due to, you know, insufficient revenues overall. So to make progress on those initiatives, we seek grants. It's just to be clear that, you know, that money for the matching funds needs to come from somewhere, and they typically come from the operating reserve. So we mentioned, you know, the provincial transfer, that it was cut totally out of the blue in 2019 without any warning, and that these sorts of things can happen. It did happen. It could happen again, and we need to be aware of it. Unfortunately, it did happen mid-year, and so we had to do in-year cuts to deal with that reduction in revenue. And then lastly, though we hope unlikely, is a cash flow interruption from the City of Ottawa. The City of Ottawa is our 90% funder. Okay. Paul is having to leave the meeting, just letting you know. So as our primary funder of the levy, we do count obviously on the monthly payment that we receive from the City of Ottawa. Therefore, if we were to lose out on 1 or 2 months of that cash flow, we would absolutely want to have cash in the bank to cover that. So so when you look at all of these, the combination of the various risk factors, this is what we came up with in terms of what would be a reasonable amount to try to maintain an operating reserve. So the biggest piece of the pie, interestingly, is the City of Ottawa cash flow, their monthly payments. And just so you know, that amount of 488 is net of the payments we've just started making to them, or will start making to them in May, in repayment of the Shabamika loan. So the protracted vacancies, the staff turnover, the students, because not all of our students are 100% funded. There's a timing issue there for the hiring of students. So, and then other unplanned in terms of emergencies, et cetera. And then we just, you know, to round it out, said an additional 10% contingency. This is one methodology. This is what Ange and I thought was a reasonable approach to take to this. It was in line with some of the reading and research that, you know, we did on this. But there is no magic bullet to how an organization determines what it wants to set aside in an operating reserve. It just felt to us like a more defensible approach to why you might want to set a particular target rather than just arbitrarily saying a percentage of X. Because when we looked at our operating revenues net of levy as the benchmark against which to set our operating reserve, we just didn't feel it was entirely, you know, made sense to us. So in terms of next steps, what we're suggesting is we think that absolutely we could be drafting policies around some of those bullets that I identified off the top that other organizations have policies around. And then we think we need to definitely report back on the health of the operating reserve against some key benchmarks, at least spring and fall every year, so that the Finance Committee and the board have a good understanding of where the reserves are at. And then we need to turn our attention to the 5-year capital needs assessment, because a lot of work has happened in the past 24 months in terms of additional studies at Shabamika and Kashwakamak that are probably going to affect our cash flow requirements in the near term. And then to, plot that out for the next fall budget and the 10-year capital plan. So I'll stop presenting now, and Ange and I are happy to answer any questions you may have.
Okay, thank you, Sally. I think I can see everybody. Oh, there we go. Okay. Questions to the staff or comments on the report? Eli.
So in summary, did I lose Sally, or she can still hear me?
You're trying to get Phil on the screen.
Okay.
Can you still hear us, Sally?
Yes, I can.
Perfect.
Okay. So Sally, basically what you're saying, in summarize this nice report, what you're saying is we need to, the number we should be looking for to achieve is 700 instead of 600. Is that what you're recommending?
As a goalpost, yes.
Okay. I understand that, but I mean, if it's obviously we can live with 600, but I mean, if 700, the number we have our goal, how do you expect to achieve that? Because clearly the time to create those policies is not on a budget time. We should do it ahead of time or ahead of budget. But when do you think the right time to recommend to the board we need to move from 6 to 7?
So I think that, in terms of drafting policy, and I should clarify, I'm not suggesting a particular number. I'm suggesting a particular approach, that we take a risk-based approach to setting the operating reserve, and that will vary year over year, and that we could assess it each year. And sort of just track to it to see how we're tracking against the goalposts, right? So, because everything we were reading was that they set targets, but not in a prescriptive manner. So it provided, the councils or the boards with the flexibility to go below or obviously above if they so chose. So in terms of timing for coming back to the committee and board with policies, I think May's too early. I just don't think we could actually do it by then. June is our board tour, knock on wood. I hope we're all in a position to do that. So I think July is a reasonable timeline for us to come back with draft policies.
And I'm okay with that personally, but I mean, it's good to be able to have a policy in place. And I'm sure, in my private life, when I run a business, before we even think of buying a business, we think, what if, something happened, how long I need to manage, how much reserve I have to be able to run my business if something happened. And there's always something happening in a business, ice storm, interruption, whatever. So I mean, as long as we understand that there is a goal we like to achieve, and then, I'm comfortable with it. Doesn't matter when you come up, because I saw the report and I really like what we're seeing, and I always challenge whether the city or the police service to make sure our reserve or unfunded liability. I'm sure, Sally, you heard me talking about this forever, to make sure it's in place in case something happens. So anyway, I like what I've seen, and I'm glad you had the time after the budget to come up with some nice detailed report. So thank you for that. Thank you, Madam Chair.
Thanks, Eli. Phil Sweetnam.
I like the idea of what we've come up with and know what we might strive to get moving from 600 to 700 should be achievable. One of the things I wanted to ask about is in the presentation under section 2.1, existing laws and regulations and bylaws, it says that unlike in the Municipal Act, conservation authorities have the right to establish and manage their reserves. Could I ask, we seem to take a very modest return from banks. And yet there are organizations like the Community Fund in Ottawa and even a church I attend, they go with organizations that yield a much better return. They'll guarantee a base. And I wonder if staff could look at whether that's first, if it is indeed legal for a conservation authority to do that, and perhaps a portion of your funds could be put into a fund that does increase. I noticed last year there's a fund that the church uses that gives a 4% base, but it also if the market does well, it gives you even above that. And I think the return was something like 11%. Obviously, there'll be ups and downs, but over the years, they've done very well, and they even in a down period of market, they seem to be doing better than what the market itself. I'm not saying put all the funds in, but I think you should look at a way of how can we get our best returns. And if you ask the bank, they're going to say, we got the best plan. But look at community-based funds, churches and other organizations, see who, when they have public, funds they don't want to put at risk, what are they doing with it? And I think the community fund would be a great one to ask about. Thank you.
Thanks, Phil. Other comments or questions to staff? Okay. Seeing not, we would go to the motion then. So be it resolved that the Finance and Administration Committee recommend that the board direct staff to 1, prepare and table draft policies governing the operating reserve and restricted reserve funds. 2, report to the board each fall on the state of the operating reserve and reserve funds concurrent to seeking budget and levy direction. 3, update the 5-year capital needs assessment and assess the health of the reserve funds. And 4, update the 10-year capital plan, including a schedule of projected capital levies and reserve contributions. Is there a mover and seconder for that motion, please? Moved by Eli and seconded by Janet. Thank you. If there's no further comment, ask all in favor, please raise your hands. Thank you. That carries. Thanks very much, everyone, and thanks, Sally, for the work, and your student for the work on that. So our next is the insurance inspection report. It's on page 26.
Yeah, this is just a quick informational report. I just thought the board might be interested, particularly as a lot of the issues they raised might be of interest to our municipal members. Mm-hmm. So I thought the report might be something you might want to share with your own staff. So, I mean, there were no big surprises. I think it was instructive, the comments that the insurer made about, you have to ensure that, for instance, an entire length of a section of trail meets all requirements for accessibility if you're going to designate it accessible. And there are liabilities if you're not, right? So it means that we're having to de-designate some of our trails until such time as we're able to bring them up to standard. It also precipitated then a discussion amongst staff, and this is something we'll probably come back to you about, is that we'll probably need to look at all our conservation areas and prioritize which trails do we want to have accessible, and what are the cost pressures to make them accessible, and what sort of timelines do we want, and to, if the board is supportive of that, because it is an investment. But once we would have that, then that would be an example of where there are some funds in play out there, over time to help organizations bring infrastructure up to AODA standards. So it's just something I want to flag for the members, that this is something that we need to be probably putting a more active strategy around, both in the planning and the financing. Off the top, I mentioned was the business about us needing to enforce our dogs on leash policy, because that is a very real liability I gather that the insurance sector is seeing. where organizations haven't been. So we are going to have to be putting in place some sort of plan. And again, we may table that game plan back at the board for information, but it's important for you to understand why we'll be bringing it forward. And then lastly, I just wanted to highlight that we do have a game plan for, mitigating the risks that the insurer identified. And you see that on in the table on page 3 there. We'll be able to start some of it this year, but it'll take us, at least 2 to 5 years, possibly 4 years to address everything, unless the board decides it wants us to accelerate any of those activities. But at least within current budget, we're able to address some of those things by repositioning priorities within the organization. So happy to answer any questions you may have.
Okay. Thanks, Sally. Any comments or questions for staff?
Oh, Phil has his hand up.
Oh, go ahead, Phil.
Yes, just quickly, it's going to be very hard to enforce the no leash requirement at Morris Island, for instance. I think if it's not too intrusive, it may be appropriate to say there's video surveillance, and we'll prosecute if people are going with their dogs off leash. In the times that I've been there, I noticed there are quite a few people who do go without their dog, do not have leashes for their dogs. Mm-hmm. So thank you. As I said, you may just have to have they have quite a large storage thing in, so that, and I think hunters and people like that use that kind of stuff. And perhaps it just might stimulate a few more people to really think nobody, to use leashes when they think somebody is watching, mm-hmm. or somebody cares. Thank you.
Thanks, Phil. Any other questions or comments? Okay, so this one was for information, so we can move on to the next report, which is an update on the grants, page 29.
So this one picks up on that same thing, is that grants can be wonderful. They can also be very challenging. And so we wanted to, because there had been a question raised previously on what basis do we decide to pursue grants? And so I wanted to just share with the committee on a go-forward basis the approach that we'll be taking. So with respect to major grants, WECI, it's that one we will always apply for in accordance with our capital program. NDMP, it's actually scheduled to end this next year, but discussions are underway at the federal level to continue, if not the NDMP program, some other type program, because of the climate pressures and the recognition that across Canada, there is a backlog and a major gap in information around what's core to our business, which is floodplain mapping, risk assessment, erosion control, all those sorts of things, drought mitigation, and the like. So, I see us continuing to apply for it, but I think it would be prudent. The surplus, our side of it would have to come from operating reserve to pursue those. Unless another one of the individual parties, such as the City of Ottawa, step forward, as it has done within the City of Ottawa, and when we've done NDMP projects in the city. But when we've done NDMP projects outside the city, it's been the operating reserve that has been used. And so I'm flagging for you that going forward, for us to continue to make progress on, expanding the floodplain mapping to more of the watershed, because right now it's a very small fraction of the watershed that actually has floodplain mapping, that there will be this pressure on the operating reserve. And so while we'll be coming back to you, we cannot accept NDMP funding without a board resolution. So we would apply as these things come available, because typically they have like a 3-week window or something ridiculous that you have to apply within. So we would always apply, but unless you were prepared to and allow for the use of the operating reserve, we would not follow through with it. So that would be the approach for these major NDMP type projects. With respect to stewardship type initiatives, mostly those are very small grants, and either we have the staff on hand to deliver the program, and these are just small initiatives on top of them, or potentially they're paying for a summer student to help administration. For instance, the new ALICE program, which we're very close to launching now in the County of Lanark. But the challenge is when the workload associated with the grant, let's say it's for, planting of 1,000 trees. If we don't have the staff to actually make that happen, there's absolutely no point in us applying for those kind of grants because they can't be accommodated within the existing FTE count. So unless there's some other grant that's paying for a student or the same grant, there are constraints as we've had discussions around the workload that staff can take on. So we will always be taking a keen eye at any stewardship one that comes our way. And I'm saying stewardship, but it could also include education and the like, but it needs to be balanced against the availability of staff to actually perform the work. And then lastly, when it comes to student subsidies, there's always a timeline issue in that we're hiring in February, March, and often we don't hear about grants till April. And actually, this is an ongoing thing around, year round. For instance, we got a notice in February about a grant for students backdating to January that was going to be expired by March 31st. So invariably what we end up doing is we hire on speculation is the simple point. If we know we have at least 50% funding for that student, then we apply. And we know that over the course of the year that we get at least 50%. And as we're moving through the fiscal year, we're able to see how we're tracking to our budget and make those hiring decisions. But early in the year, when you're trying to line up summer students and the like, it is a speculative art. Now, it's never been an impact in the years that we've been here, that we've been doing that. We always get some student funding and we curtail where necessary. It's not a pretty approach, but it is the approach that we take. So just wanted to be transparent with you on how we manage students. So those are the main types of grants that we have, and happy to answer any questions you might have on that.
Thanks a lot, Sally. Any questions to Sally on this one? Okay. This is, you've well warned us before though, too, on this one. So appreciate the update, but we certainly are aware of the challenges that grants bring along. Even though they're great, they can create some challenges too. Yeah. So if there's no comments, I think our next item is the adjournment. See if we had anything under other new business or anything like that. I don't think we did. And I really miss my second screen here. Yes, so we don't have anything under other business. So our last is just the adjournment. Is there a mover and seconder to adjourn? Moved by Bill King, seconded by Eli. All in favor of adjournment at 12:23. Thank you. We are adjourned. So thank you very much, staff. Thanks to everybody on the committee. Appreciate your work. It's not always easy on this one, that's for sure.
Okay. Thank you very much.
Bye-bye.
Bye-bye.
Have a good afternoon.